a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A rare deal. The U.S. turns to Australia for supply of rare earths with a landmark pact. The Takaichi trade. JGP's under pressure as Sanae Takaichi becomes Japan's first female prime minister. And mega caps in focus. Earnings from GM, Coca-Cola and Netflix to give insight into consumer and corporate health. So let's take a look at the markets, because obviously we finished with the indices up more than 1% apiece yesterday. We look to be just experiencing maybe a little exhaustion once again today, or maybe we're repeating our pattern from the last 2 weeks, up day, down day. But either way, we're not pointed that much lower on futures. And don't forget, the Nasdaq 100 is up 20% year to date. For the S&P 500, we're talking about a 14.5% gain. Let's take a look at bonds, because there we're maybe seeing a little more of a reflection of what's going on in markets. The 10-year yield firmly below 4% once again. It is staying there. It peaked its head over 4% once or twice yesterday, but we're just definitely lower across the curve with that 30-year yield down to 4.55 and the 2-year yield at that key level of 3.45. Ed Yardeni making some waves with his note saying that, if oil prices continue to decline, that impact on inflation plus the correlation between the two means that we could see 3.75 on the 10-year yield. But given that we've moved 17 basis points this month alone, what's another 17 basis points, right? We do want to point out that we have a weaker yen today as well, with Japanese assets moving on political developments over there and the VIX still above 18. Now let's get to some individual movers. For that, we'll go across to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on regional banks as we're continuing to get better than expected earnings from the likes of them. Zions last night out with better than expected earnings outside of that $50 million charge off they announced last week. Remember, Zions was really at the core of those regional bank worries last week, up 2.6%, basically erasing its drop from last week. Now, this comes after better than expected earnings, as I mentioned, but you also had the CEO saying that the situation of last week was a one-off. The chief risk officer also saying that they have reviewed the loan portfolio, have not found any other issues. They've also hired external sources to come and review their loan portfolio, so that is undergoing. But this is really buffering the regional bank trend at the latest. We've had now two back-to-back sessions of some pretty strong gains across regional banks. Let's move on to the AI trade. Again, it is capturing most of our attention. Core Scientific in the headlines this morning. Now, Core Scientific used to be a Bitcoin miner. They have now changed to more power infrastructure for AI computing capacity. The shares are up nearly 3.5% in pre-market. Now, this is because a key proxy advisor has advised them to reject the bid from Coreweave. Coreweave is that major cloud infrastructure company, went public earlier this year and counts Microsoft as one of its key customers. Now, the bid from Coreweave was around $20 a share, valued Core Scientific at around $9 billion, but the chorus is growing that is not enough for Core Scientific shareholders to accept the deal. They do vote on it on October 30th. Lastly, let's move on to the healthcare industry. DocGo, this is a virtual healthcare company, has announced it has acquired SteadyMD, which is a telehealth provider, and they're hoping to now offer telehealth services across 50 states and expand their breadth. So DocGo shares are up 32%, even though they have paid for SteadyMD. It was an undisclosed amount, but shareholders are still looking positively on the acquisition. Bonnie?
Valerie, thank you so much. Valerie Teitel there in London. And later this hour, we're going to be taking a closer look to this earnings season with Sitara Sundar of JPMorgan Private Bank. But first, President Trump striking a landmark deal with Australia.
We're here to talk about trade, submarines, lots of other military equipment. We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months.
For more, Bloomberg's Brendan Murray joins us now. So, Brendan, a pretty unprecedented type of pact. Will it ensure that we will get a supply of rare earths pretty soon?
Yeah, exactly. So this is the biggest deal of its kind between two Western nations that we've seen to date, and we're likely to see more of them. Australia being a huge exporter of mined materials, and the U.S. Being a huge importer, consumer of rare earths, critical minerals, and those kinds of things. The timing of this is especially important because it was just 2 weeks ago that China increased its rare earth export restrictions and sort of put the world on notice that it has control over these supply chains. And so, as the president said, it's been in the works for several months now, but we're likely to see other such deals like this coming down the track as the U.S. tries to deal with this threat of China being able to control the global supply chain of rare earth minerals.
Brendan, will this particular pact make China a little sore? Does it give the president more leverage? As John Authers writes today, Trump's hand with China is improving, but is it enough?
Yeah, exactly. Australia is not a huge miner of these kinds of materials. The key really is processing, and China controls most of the world's processing of these rare earth. And so it's likely to catch China's attention, but in terms of taking market share from China, it's unlikely to make a huge difference. Australia has the capacity to produce about 1/10 of what China can. So it makes a difference, but it's not going to turn the tide.
The Supreme Court has been told that the Trump tariffs are illegal, so we got that side of the argument. What happens next, Brendan?
Yeah, so we're hearing from the companies that are complaining about Trump's tariffs and have taken legal action that Trump has lost in lower courts. He's now appealed to the Supreme Court, and this is all the lead up to a big November 5th hearing that we're going to have. Both sides are going to present their case. We're going to hear from the justices. The president has even said he wants to attend this hearing. We'll see if that's even possible. But it really comes down to whether the Supreme Court will say that Trump has the authority to use these tariffs or whether he doesn't. If he loses, he still has these 232 tariffs, these sectoral tariffs that he can use. They're currently 12 of those such investigations ongoing, so they could still put a lot of tariffs on American imports with some other authorities. But this will be a big test of whether the president can use kind of unilateral authority to put tariffs on the U.S.'s biggest trading partners.
Brendan, thank you so much. That is Brendan Murray, our trade czar. Over in Asia, Japan has elected its first female prime minister. Sanae Takaichi has won the parliamentary vote. That was earlier today, with just 4 votes above the majority line needed to confirm her victory. Garod Ridi of Bloomberg Opinion joins us now from Tokyo. So, Garod, she's been called hawkish, nationalistic, but what's she like fiscally? Will we see stimulus as the markets are anticipating?
Certainly you'll see, I think, a more positive attitude towards stimulus than what we had under Ishiba or indeed his predecessor, Fumio Kishida. However, I think before she gets on to any large economic plans, we haven't really seen much of what they might be. We might actually get to see some of that later today when she holds her first press conference as Prime Minister. But I think before she does anything on that, she needs to do something about relief measures for inflation. That's the really big issue in the country at the moment, especially households suffering from inflation at the checkout. Measures to help households, especially low-income households, with tax rebates, maybe with some kind of handout. That's going to be the first thing that she's going to have to concentrate on in the extra budget that she's now going to have to draft. But certainly you can expect a more positive attitude towards stimulus than we've been seeing from recent administrations.
Yeah, and of course, it has implications for the BOJ next week and whether it decides to raise interest rates or no. But I wanted to ask you about leaders in the private market, because those from Blackstone to Apollo, KKR, gathering at the Japan Asset Management Forum. Now, they're showing their enthusiasm for investment opportunities in that country. What makes the market particularly attractive for them at this time?
It's a great time basically for anyone to try to be investing in Japan. Obviously the stock market is booming, but you still have so many companies in Japan that are undervalued, combined with an attitude within the country where, these companies that were not using their assets effectively, that were not using their cash effectively in the past, were just kind of left to do whatever they wanted. Now there's an attitude within the country, within boardrooms, that managers, executives have to do something. They have to improve their valuations or otherwise sell themselves. That's been coming very heavily from the Tokyo Stock Exchange. So you have an environment there where it's perfect for people who want to come in, If a company wants to sell off assets that it hasn't been using, maybe it's got a division that it doesn't know what to do with and has been costing its money, those deals are everywhere now in Japan, and you're seeing that reflected in the attitudes of those asset managers coming in.
It's fascinating. I mean, the yen is weaker. We're above 151 today, and JGBs, as I was saying, under pressure. So for the regular investor that may be being attracted by this widowmaker trade, so-called, does that remain the consensus? I mean, bonds are down 4% on a total return basis year to date, which is worst performance in global bonds. Does that continue, Gaurav?
I wouldn't expect a major shift in that at this point in time. Like I say, I think from the appointments that we're seeing Takaichi make today, you could expect stimulus, you could expect more bond issuance, or at least certainly less of an attitude of trying to restrain bond issuance. In Japan, there's always this back and forth between various governments and the Ministry of Finance, the bureaucrats of the Ministry of Finance, who want to constrain spending. I think you're likely to see, especially with the appointment of the new Finance Minister, Satsuki Katayama, you're likely to see more pressure being placed on the Finance Ministry to loosen the purse strings a little bit more compared to the attitude that we've seen a little bit. So I would expect that the trends that we've seen, certainly over the past couple of weeks, they're likely to hold for a while. And the BOJ, I personally think they're also likely to have to continue to adopt their wait-and-see approach.
Gaurav, thank you so much. That is Gaurav Reedy of Bloomberg Opinion in Tokyo. Thank you. Now to other top stories trending on the terminal this morning. The UK government borrowed $9.6 billion, more than forecast, in the first 6 months of the fiscal year. The borrowing, the second highest on record, was driven by a spike in debt interest costs. Meantime, the BOE has started industry outreach about stress testing the private credit market. Any tests would likely be launched within the next 12 months. The BOE is expected to give more details before Christmas. Former French President Nicolas Sarkozy has entered Prison de la Santé in Paris after his conviction for a criminal conspiracy. This marks the first time a former French president goes to jail. He's unlikely to serve the full 5-year sentence and can immediately file a release request, which typically takes a month to process. Coming up, Bloomberg Tech Summit in full swing. We're live from London next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Bloomberg Tech London is underway, bringing together some of the top voices in Europe to discuss everything from tech sovereignty to AI regulation, cybersecurity and industrial policy. Earlier today, we heard from the CEO of Pigment, a company that offers AI tools for financial planning.
The way I think about tech sovereignty in Europe is not so much about protecting yourself, but more growing faster. And I think we have to ship faster. We have to be faster at bringing the right technology in Europe. And this is really what I try to push, working all together, creating the right energy infrastructure, the right talent infrastructure, the right business infrastructure. And what I encourage all of our customers and businesses is to adopt technology faster.
Tom McKenzie, host of Bloomberg Tech Europe, joins us now. So, Tom, what have the executives there been saying about Europe's ability to build truly sovereign tech?
Yeah, Vonnie, well, actually, interestingly, the CEO of Pigment there, Elena Crespo, also saying that there's a need for European enterprise to adopt these AI solutions more quickly. She gave an example, in fact, of how some of our European clients might take 6 months to sign a deal and to actually adopt some of their AI solutions versus 2 days in the US. So that speed of adoption gap between Europe and the US is fundamental. And in fact, we've been hearing from executives at Mistral as well, Mistral being one of the leading LLMs, really the best hope when it comes to European sovereign large language models and AI. They've been talking as well. That executive at Mistral, she's been talking about the fact that there needs to be faster adoption because then it creates this circular momentum in terms of raising additional capital to keep funding these efforts. So adoption has been a key part of it. Sovereignty, why is that important? We've had a reminder in the news flow today of just why that focus on sovereignty is there for Europe. You think about the US signing a deal with Australia around rare earths. Rare earths, when we have a reduction there, it challenges the defense space. Defense technology and defense sovereignty is going to be key in terms of the conversations today as well. We're going to be hearing from Helsing, for example. I'll be sitting down with the co-founder and the CEO of what is the leading defense tech company in Europe. We're also talking about space innovation and how Europe needs to be less reliant, for example, on Starlink and SpaceX. So all of that is coming together in the conversations today here in London.
We are looking forward to those conversations. Our thanks to you. That is Bloomberg Tech Europe anchor Tom McKenzie. Let's stay there now because our executive editor for Global Tech, Tom Giles, is sitting down with Coreweave co-founder and CEO Michael Intrator. Let's take a listen.
Customers in particular, and do you see a degree of urgency around sort of bespoke and very region-specific solutions in terms of the data center?
Yeah, so, you know, I think that the way that the demand comes through the market right now is it's sort of bifurcated in a lot of ways, right? Like, you've got one driver of demand that's coming from the most enormous companies in the world, the largest labs in the world, you know, and you know, your OpenAIs, your Mistrals, all of them together, and they are very kind of tech forward, kind of thinking about how they're going to address this. And then, in addition to that, you've got a host of startups, you've got a host of application layers that are looking to be able to orchestrate their compute that way. I mean, and you know, we just completed the acquisition of Monolith, which was a UK-based company. It's a good example of a company that has, you know, a significant distribution of clients, kind of outside of that first tier of really, really large consumers that touch a lot of other players. You know, another acquisition that we did earlier this year was Weights and Biases, another great example. They have a massive breadth of clients, really, that you know, globally, that really are providing us that roadmap. So we're kind of tackling the problem from two sides, right? One is the really scaled players, and those are kind of relatively small in number, always have been, and then there's this groundswell of smaller consumers that you need to be able to address, and you need to be able to help them as they're tackling these problems that are going to come up where they're not going to have the ability to kind of shift workloads around within their infrastructure.
Sure. Around the time of your IPO, there was some chatter on Wall Street about a lack of diversification of your customer base, right? And Microsoft accounting for a big chunk of it. Obviously, since then, you've announced some pretty breakthrough additional customers, OpenAI, Meta. Talk about. And your stock has more than tripled last I checked, so I get the sense that the market gives it a stamp of approval. I'd like to just get a sense of the degree of urgency for greater diversification, to the extent that you have that. Where does it come from and how soon?
Yeah, so look, you know, regardless of what the street said about diversification. Diversification's always been a priority for us. We understand the value in having a broad array of clients, both from the perspective of it stabilizes your business, but also the information that you're getting by serving lots of different clients help you tailor what you're building, where you're building, how you're building, so that you're better able to serve consumers of this type of product. And so I was in an investor meeting recently, and there was a large Microsoft deal that went through.
All right, that's Bloomberg's Tom Giles speaking with Coreweave CEO Michael Intrator there at Bloomberg Tech Summit in London. And you can continue to listen in on your Bloomberg terminal at LiveGo. Coming up, a look at what else is making headlines in your front page news. That's next. This is Bloomberg. Time now for your front page news. First up, the Financial Times reporting the US Army has asked private equity, Apollo, Carlyle, KKR, Cerberus among candidates, to pitch strategic projects to help the service fund a $150 billion infrastructure overhaul. It's the latest effort from the administration to enlist some of Wall Street's biggest investors in national security. Next up, sources telling the Wall Street Journal a group of banks, including JPMorgan Chase, Bank of America, Goldman Sachs, is struggling to put together a $20 billion loan to Argentina without leaving themselves on the hook to the virtually bankrupt South American country. Bankers are waiting on guidance from Treasury on what collateral Argentina would be able to provide for them, or if Washington would plan to backstop the facility on its own. And on the Washington Post's front page, a federal appeals court rules President Trump could deploy the National Guard to Portland, Oregon. That blocks a judge's ruling that prohibited the action. The 2-to-1 majority ruled it was likely Trump acted lawfully in federalizing the National Guard during protests over immigration enforcement. And those are your front page stories. Coming up, $3 trillion in market cap reporting today. We'll get more on earnings with Sitara Sundar of JPMorgan Private Bank. That's all next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A rare deal. The U.S. turns to Australia for supply of rare earths with a landmark pact. The Takaichi trade. JGB is under pressure as Sanae Takaichi becomes Japan's first female prime minister. Mega caps in focus. Earnings from GM, Coca-Cola and Netflix among companies today to give insight into consumer and corporate health. So let's take a look at markets, because even with that rare earths deal, we still see futures pointed lower, although fractionally, and we should remember that we were up by 1.1% on the S&P yesterday and 1.3% on the Nasdaq. And year to date, well, don't even get me started, we're up 20% on the Nasdaq 100 year to date. Let's take a look at bonds, because yields have been moving, but they are staying where they were. We're back down to 3.96 on the 10-year yield. The 2-year yield came up to 3.45 and is staying there. The 30-year yield down to 4.55. So lots of movement in this yield curve. Ed Yardeni out with a note in the last few hours suggesting that the 10-year could actually hit 3.75 if oil continues to slide because of the correlation between the two asset classes longer run. But that's what we have to look at today. The VIX down to below 19, still slightly elevated. We have oil a bit softer, and the yen there, as you can see, weaker at 151.75 as Sanae Takaichi names new cabinet members. Let's get to some individual stocks to watch now. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on Zions, that regional bank that was at the heart of those credit worries last week. Out with results better than expected, and shares are trading higher, up 2.5%. The CEO saying some positive things, that the issue last week was a one-off. It was an isolated incident. And even the chief credit officer saying they have gone through the loan portfolio. They don't see any other similar issues. They've also hired an external team to review their loan portfolio as well. So it seems like things are bouncing back when it comes to U.S. regional bank. Zions in the green this morning. Let's move on to the AI trade. The headlines this morning are around Core Scientific, who's attracted a takeover bid from Coreweave. Now, Core Scientific used to be essentially a Bitcoin miner. It's now changed to having computing capacity available for AI data centers. Now, Core Scientific, the key proxy advisor, has suggested that the bid from Coreweave is too low. Now, the shareholders will vote on this takeover next week, but it does seem like unless Coreweave does increase their bid, they will vote no on this, and shares are trading 3% higher on the back of that. Lastly, let's end in the healthcare industry. DocGo, this is a mobile healthcare services provider, has announced an acquisition of SteadyMD. That is a telehealth platform. They're looking to offer services now across all 50 states in the U.S. Now, it was an undisclosed figure that DocGo had paid for SteadyMD, but still shareholders, I guess, are looking positively on this. DocGo is up 41% so far in pre-market trades. Bonnie?
Another massive move. Valerie, thank you so much. That's Valerie Teitel there. $3 trillion in market capitalization reporting today. JPMorgan's Sitara Sundar keeping a close look and writing, quote, "The critical test is whether ongoing AI spending is being effectively monetized with additional attention on supply chain indicators like book-to-bill ratios and data center power timelines." I'm pleased to say Sitara joins us now. She's head of alternative investment strategy at JPMorgan Private Bank. So Sitara, thank you so much for joining. Obviously, that particular quote is about the AI trade. So let's get started there, even though today it's more of the mega cap consumer focused names. The AI trade, will it bring us through this earnings season intact?
So it's the number one question we're all grappling with, because markets don't seem to be as patient when you think about this dual mandate that we've placed on a lot of the hyperscalers and the bigger tech players that have been dominating returns, not just year to date, but over the past 2 or 3 years, is this dual mandate of efficiency from the cost side and then optimization in terms of actually seeing productivity and efficiency gains from artificial intelligence in terms of it impacting the bottom line. But what we expect to see in this earnings season and what consensus expects to see is still around 8% earnings growth, which is still meaningful. It's a deceleration from what we've seen over the past couple of quarters, but still meaningful. And tech and comm services is going to contribute about 60% of that, which is meaningful. That's the expectation. So what we're looking for is any indications and signs about artificial intelligence and actual productivity gains or signs of productivity gains on the investment that's already been put into place. And then 2, on what that CapEx investment outlook is still going to be. Are these hyperscalers still going to be putting the same amount of CapEx to work as they have been, or are we seeing any signs of a slowdown?
So we do have a couple of weeks before we get to some of those big names. As for the universe of names that we saw on the screen a moment ago, they're all today. So 3M, Coca-Cola and Netflix. We're going to get some real insight into the consumer, presumably, today.
Yes, and it's increasingly important. I think whenever we think about the market, there's always this adage that's mentioned that the market is not the economy. And a lot of that is because the economy is shored up by the consumer. It's a little bit different so far this year because we've actually seen AI CapEx actually boost up some of economic growth, at least within the United States. But the consumer still makes up 60% of GDP. So when we're looking into earnings so far this season, it's the health of the consumer balance sheet and what consumer spending levels look like, and whether or not consumer spending in general is just on staples, or if we're actually starting to see a pickup in discretionary spend, and whether or not we're seeing a pickup in broad-based discretionary spend. And we have seen some indications of airline activity pickup and travel pickup as well, that we still feel confident on not just the consumer balance sheet, but their propensity to spend.
Yeah, because we also haven't been getting readings of inflation expectations, right? Not official ones really anyway. So there's a lot to ask in these reports. That said, they're a little bit backward looking. So we have to watch for what is being said on the conference calls and so on as to the outlook for the consumer. But I mean, the executives are as flying as blind as we are on this, right? We still don't know the impact of tariffs.
So I think the biggest thing is that in the same way that we think about portfolio management as probability weighting scenarios, we know that even in the past couple of earnings seasons, a lot of executives have come out and trying to probability weight the different scenarios that are out there in terms of what that means for guidance and forward-looking guidance. You have usually the base case scenario, which is even our base case scenario of moderate economic growth, though economic growth is going to be slowing, but not a call for recession. We still don't believe that recession is our base case. But there is this left tail risk that continuously rises, which is this idea that inflation and inflation volatility is going to be a persistent risk that we have to monitor for. And that means in terms of companies, there's already been, when you think about tariffs, supply chain mitigation efforts that have happened over the past couple of years. This is not the first time that the United States has been in trade negotiations over the past few years. So there's already been some of that where we've already seen companies mitigate the risk of tariffs. But when we think about the outlook moving forward, it is 100% right to say that inflation volatility is likely going to be here to stay. We actually just released our long-term capital market assumptions yesterday, which is our forward-looking projections for what we think the world is going to look like over the next 10 to 15 years. And one of the findings from that is that inflation volatility is likely going to be persistent. Inflation is likely going to be a little bit higher, which means that the correlation benefits that you've usually gotten in a portfolio from just stocks and bonds may not persist moving forward.
Is that going to be visible as soon as Friday when we get the CPI data? Hopefully, fingers crossed. Or, are you talking more longer term? And also, how do you play this inflation volatility? Given that we know the Fed is, very concerned about the labor market, right, and likely to
Definitely. So on the first point, it's likely going to be a longer-term story. I think you're going to see fits and starts in terms of where inflation is headed, but the likelihood that inflation stays higher for longer versus what we saw post-GFC to pre-2022 is a firm statement that we believe. On the second part, in terms of how to mitigate against inflation volatility, alternatives, and specifically, because alternatives is a broad basket, areas like less correlated hedge funds, when you think about relative value and discretionary macro, infrastructure and real estate are becoming bigger and bigger pieces of the client conversation now, because at least on the real asset side, when you think about infrastructure and real estate, you're getting inflation resilient income as well as the potential for capital appreciation.
Fascinating. Infrastructure and real estate. Sitara, thank you so much for coming into studio. In particular, that is Sitara Sundar of JPMorgan Private Bank. Now to other top stories trending on the terminal this morning. Bond funds run by some of the world's largest asset managers, such as BlackRock and State Street, avoiding forced sales of French debt holdings by changing investment rules. The changes allow the funds to maintain exposure to French debt, even as rating downgrades push France below the AA threshold. Unilever pushed back its demerger with Magnum Ice Cream due to the US government shutdown. Unilever has been working on the splitting of its ice cream division since last year. It expects to complete the spin-off this year. Chinese toy maker Pop Mart posts strong revenue growth through the quarter in mainland China and overseas markets following the release of a new series of Labubu dolls. Revenue increased as much as 250% year-on-year in the 3 months ended September. It launched new mini Labubus in late August, fueling another wave of buying frenzy. Coming up, the US and Australia strike a landmark rare earth pact. Your trade update next. This is Bloomberg.
We're here to talk about trade, submarines, lots of other military equipment. We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months.
President Trump speaking there at a meeting with Australia's Prime Minister at the White House. For more on trade now, Bloomberg's Brendan Murray joins us. So, Brendan, this pact, does it even partially replace what China has been sending our way rare earths-wise?
Yeah, so what we're seeing is the U.S. is really trying to play catch-up in its ability to source rare earths from overseas. The U.S. is among the top 15 rare earth with the capacity to mine rare earths, but is really far behind China. China has something like 80% of the world's supply of this. And so what we're seeing are the Trump administration going down 2 tracks, these bilateral deals with countries like Australia. We've seen him make rare earths part of his negotiations with Ukraine. We've seen him talk about Greenland. Greenland also has a lot of rare earths. And then we're seeing the Trump administration along a parallel track take stakes in private rare earth mining companies in the U.S. and Canada. So we're only going to see more of these as China restricts the flow of these as leverage in the trade negotiations. And we could see, other deals down the track. The U.S. is going to start negotiating with Canada as part of the USMCA review. You could envision something with Canada coming together. Canada having a lot of rare earths as well. So this is a real sort of new field of rare earth diplomacy, if you will, and the Trump administration is really racing to try to make sure that it can catch up to China's big lead in this area.
Yeah, and I mean, these are definitely new avenues for the US and a bit of a relief, I'm sure, to those who need rare earths. But at the same time, as John Authors, our Bloomberg opinion columnist, writes today, Trump's hand with China is improving, but is it enough? Is this enough leverage to make China back down a little on rare earths or other things?
It's not going to happen overnight. The Australian mining industry needs a lot of investment, and that's what's part of this arrangement. Is the U.S. will be part of the financing of some of these projects. But China has that control right now, and President Trump and President Xi are going to meet in a couple weeks, and it will really come down to who has the most leverage. And at the moment, a lot of people would tell you that China does, because it can turn the flow of those minerals on and off, and that can really hurt your automobile industry, your semiconductor industries, all sorts of medical equipment require rare earths. So it's really coming down to the U.S. planning long-term, but there is no short-term solution for this.
Okay, Brendan, thank you so much. Brendan Murray there, our trade czar. Let's head over to London now, where Bloomberg Tech is in full swing. The event looking at all the major trends across the sector, from AI and infrastructure spending to cybersecurity. Tom McKenzie, host of Bloomberg Tech Europe, is there, joins us now. So Tom, sovereignty is obviously a huge theme at this particular summit. What have executives there been saying about Europe's ability to build truly sovereign tech?
Bonnie, it's very interesting, given your conversation just now with Brendan, focused on the question of rare earths and that deal being signed and inked between the US and Australia, because rare earths is also part of the conversation here because of that sovereignty issue, and particularly when it comes to European defence. As we look, for example, in recent weeks at Russian jets that probe NATO airspace, Russian drones as well, the focus and the need for Europe to have its own sovereign defence capabilities is front and centre part of the conversation here. And rare earths and supply chains, resilient supply chains, is part and parcel of that. Of course. So we're going to be hearing, for example, from the founder, co-founder and CEO of Helsing, which is the most valuable, really the most significant European defence tech startup here. That will be happening in a couple of hours' time. But we're also talking about sovereignty when it comes to space technology as well, and the reliance that Europe has still on Starlink and SpaceX. This at a time, of course, when even NASA is saying it wants some competition versus SpaceX. So all of that is coming together. It's worth mentioning as well that on the AI front, when it comes to sovereignty, there is one player in Europe. It's called Mistral, the large language model, the French company, recently invested in by ASML. They've been on stage as well, talking about the need for adoption, faster adoption amongst European enterprises. So those are coming to see some of the key themes we've been hearing, and recently just on stage, we've had the CEO of Coreweave, but also Cohere as well, the large language model. Coreweave, of course, the Neo cloud builder.
It's so fascinating, Tom. I have to ask you, what else is top of mind for these executives and for the conversations today?
Well, inevitably, this being Europe, yes, we're in the UK, we're in London, of course, but we're talking about the continent of Europe with UK playing its part. Regulation is certainly part of the conversation, and we heard from one of the executives at Mistral saying that regulation can be a real headwind and really very painful. She just gave one example of GDPR, one rule across Europe, but iterated for 27 different regions. So 27 different European nations they have to go into, the GDPR rules are slightly different. That provides a headwind. She says there's multiple examples of that. Here in the UK, they're trying to create a more favourable regulatory environment. We're hearing from the UK Minister for AI on that front. We're also thinking about agentic AI and embedded AI as well. So the focus on robotics. We'll be hearing from some executives on those lines later today here at the Bloomberg Tech Summit. Bonnie.
So many wonderful conversations. Tom, thank you. That's Tom McKenzie there. And stay with us for more from Bloomberg Tech London, which has a host of names, as Tom was saying, taking the stage, including the co-CEO of Helsing. You can follow on LiveGo as well. Now turning to earnings season, General Motors among the companies scheduled to report results today. Let's get a preview with Craig Trudell, Bloomberg's Global Autos editor. So Craig, we're anticipating, an increase, in sales, but still down something like 24% year over year. What's the story there?
Yeah, I think a lot of focus will be on the sort of puts and takes with regard to tariffs today. This is a company that back in May estimated that they faced a $4 to $5 billion tariff exposure. They've taken some steps since then to try and mitigate that. A substantial amount of reshoring, $4 billion worth of investment to primarily shift manufacturing capacity from Mexico to the U.S. Of course, that's going to have some effect on capital expenditures and costs for the company as they try to stand up that capacity and ramp up. And it will take some time. The other, I think, sort of factor that will come into play here is, just to what extent the company is willing to sort of lay out how much the relief that the Trump administration has announced in the last few months will sort of work to GM's GM's benefit. I think in particular the trade agreement with South Korea, for example, being something that could redound to GM's benefit given the substantial amount of cars they ship over from Korea.
Yes. Now, just curious about the EV subsidies expiring and what GM will say about that. You know, it obviously brought forward some demand, but what does it mean for the rest of the year and beyond?
Yeah, GM had a great third quarter and great end of the third quarter with respect to EV sales, and yet I think it's safe to say that even for a company that is coming off such a great period, the level of pessimism is pretty substantial. I think last week we heard from the company when they announced a $1.6 billion charge that they expect, because tax credits are going away, because there's this hollowing out of emissions regulation in the U.S., that they expect EV adoption to slow. They're adjusting their manufacturing presence as a result of that. On the other hand, this actually will, especially the emissions regulations changes, this will save them a substantial amount of costs in terms of money that they've spent over years, complying with EPA and Department of Transportation rules around fuel economy and emissions. So that is perhaps a headwind that falls by the wayside.
All right, looking forward to those earnings today. That is Bloomberg's Craig Trudell. Thank you. And you can catch the CFO of General Motors today on Bloomberg Surveillance. That's at 7:30 New York time. Coming up, earnings galore will get you set for your trading day next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Earnings before the bell from GM, Lockheed Martin and Coca-Cola, among others. Then ECB President Christine Lagarde speaks at 7 a.m. Eastern Time. And we get more earnings after the market close. Netflix, Texas Instruments and Western Alliance, interestingly, will be looking to hear what they say about bad loans or other collateral damage, as it were. Zions Bancorp, speaking of which, extending gains as they eased concerns about credit fears. So it was up after the market close yesterday, up about 2.5% today. Fluor, Wall Street Journal reporting that activist Starboard has built a near 5% stake in that company and sending those shares up more than 7% pre-market. And Danaher down about 2.6%. Earnings before the bell there. Clearly, we are not expecting too much from Danaher, at least at the moment. Let's take a look at the macro situation, because we did have an up day yesterday, a very positive risk-on day yesterday. We do have the VIX coming down still, but futures are pointed fractionally lower. They were a little bit lower than they even are now earlier in the session. The 10-year yield perhaps providing a little bit of proof for why that is. Below 4% by 3 basis points and sticking around there. And we're also down about $100 on gold. Finally, a little bit of capitulation, although at 42.80, we're still not that far off our records for gold. We do have our MIV strategists saying that if you see selling in gold at the same time as you see selling in other asset classes, you may just see a very heavy bid into treasuries. I do want to point to the yen as well. It's weakening today above 151. Sanae Takaichi announcing members of her cabinet. She is now the first female Japanese prime minister, thought to be hawkish, but also potentially fiscally stimulative. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.